Let me tell you about a little stock that I have under my belt in my portfolio. My portfolio is it's coming along nicely. I'm building it up, making sure that I got some good footing when the market comes back after the little illness scare that's been going on for several weeks now. We're going to see, as the president, the United States president says, we're going to see the light at the end of the tunnel. This one's going to be about Oasis Petroleum. Oasis Petroleum is a company, an oil company that has a pretty good footing. It has pretty good opportunity and potential to rise in price and rise in value and growth over the medium to long term. It's such a good uh, stock pick that Warren Buffett himself put a lot of money, huge amounts of money, tremendous amounts of money into this company for ownership purposes. A little bit about this company here. If you take a look at its balance sheet, you can see that it's actually has a lot of wiggle room to weather the storm of the oil prices. As you guys know, OPEC Plus has been having some issues coming to an agreement for the oil prices to stabilize the oil market. As of today, we got a lot of players that are coming on board, including the United States, that are coming on board to actually try to balance the global markets. And what this will become, it looks like, is a super OPEC plus, where you got pretty much all oil producers in the world coming together to balance and control oil prices so that it stays at a profitable number. So while it's out of balance now, you'd want to jump in, and Oasis, um, is one of those companies that you'd want to get into. If you check out the balance sheet once again, the assets to liability, the total assets and the total liabilities ratio is very, very good. It's solid, actually. Like there's over 3.8 million dollars in actual wiggle room before it even evens out. Basically, you got more assets than you do liabilities, and that's always a good thing. You can also see that between 2018 and 2019, the total liabilities have gone down, so they're paying off debt, which is a good thing, especially if most of these shell companies are highly burdened with debt. Another thing about Oasis is its 2019 fourth quarter earnings report. There was an earnings beat on revenue, so it beat earnings on revenue. That's always a good thing. Revenue is rising, and liabilities are dropping. Go ahead and get into this stock while you still can, because if this one takes off, it's going to go high.